Welcome back. So markets across Asia have been holding on in positive territory and the gains are anywhere between 0.5% to 1.5%. Let's pull up the implied open. Now, this kind of an opening across Asia suggests that we should be heading on the upside as well. There we go, 30 points higher. That's what we're getting on the implied open for the Nifty. Lots of stocks to track, as we just told you. Plenty of earnings and news flow. So let's straight away get to it with our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Mangalam, Eternal, I had a very quick glance at the numbers and not that great.
Not that great. So, there were two problems with Eternal earlier, which was that the food delivery business isn't growing as fast as the street was expecting, and the losses on quick commerce are ballooning faster than the street expected. And that's exactly what continued in the fourth quarter as well. So if you look at the food delivery GOV, it's at 16%. It's actually, a decline quarter on quarter as well. So that's been declining in terms of growth. And the company said sluggish demand and shortage of delivery partners has impacted business. And they've also delisted about 19,000 restaurants during the quarter itself. And the margins too were nothing to write home about. Quick commerce, while the GOV growth was fairly strong, 134% year on year and 21% quarter on quarter, that's slightly higher than what the street was anticipating. What was higher were the losses as well. So the EBITDA loss in Blinkit actually ballooned from 103 crores in the previous quarter to 178 crores. And out here, there was no respite coming in when it came to competition, because the management said competition is only going to intensify further in the near term. They are aggressively looking at market share and will not let short-term profitability goals come in the way, which implies that there is no near-term visibility when it comes to profitability on Blinkit as well. While in the long term, this may be business positive, in the short term, this may be stock negative, and that's something that I'll be watching out for today as well. Expect the stock to see some red today.
All right, Mangalam, thank you very much for that. That's Eternal for you. I think on Indus, the next one is Indus Towers. There is a bit of a disappointment, dividend disappointment really. Reema is here with details. Reema, morning.
Indeed, it's a dividend disappointment. Numbers are actually pretty good. The company's top line has gone up by 2.4% quarter on quarter. Year-on-year revenue growth has accelerated to 7.4% versus about 4 to 5% in the prior three quarters, Q1 to Q3. Tower ads have seen a big jump up, but that's boosted by the Bharti Tower acquisitions that the company did towards the end of the quarter. So that explains. Organic tower addition, according to analysts, seems to be largely similar to the prior quarters. But reported margins are lower. You will see a sharp dip. In Q3, reported margins were more than 90%. This quarter, it's at 56%. And that is fluctuating on account of how much they recover in terms of provisional doubtful debts from Vodafone Idea. So last quarter, they recovered a lot of money, which is why margins shot up to 92%. This quarter, relative to last quarter, it's lower, and therefore you will see the margin drop. Profits, therefore, have also seen a commensurate decline. But as you said, the street was expecting or was hopeful for some amount of dividend payout because the receivables from Vodafone Idea have pretty much come to nil now. But that didn't come out. But the company did say that they've constituted a committee which will look at all forms of cash return to the shareholders, or they'll discuss all modalities. So the street is hopeful that not this quarter, but maybe in the next quarter we could see some dividends. So the hope is still alive.
Okay, all right, Reema. Thanks a lot for that. Well, let's talk about the banking names. Abhishek joins us to tell us about Federal as well as Bandhan Bank. Morning, Abhishek.
Good morning, Nigel. So to begin with, Federal Bank, it's one of the weakest top-line growth that you are seeing in last 12 quarters or 3 years. P&L versus ARPOL, the ANA is, below ARPOL. However, the PAT is ahead of ARPOL as provisions have declined more than 50% on a sequential basis. YOY, take a look, 12-quarter low growth with respect to loan growth coming in at 12.15%, which has driven the ANA growth to be on the lower side at just 8.3%. Credit deposit ratio is at 7-quarter low of 82.8% versus 86.5% in the previous quarter. Now, operating profits have declined by 6.5% sequentially, which is the highest decline that you are seeing in last 4 quarters. Asset quality remains stable thanks to high write-offs. So, gross NP ratio is one of the lowest that you are seeing in last almost 10 years, coming in at 1.84% versus 1.95% in the previous quarter. Now, Bandhan Bank reported a weak quarter this time around with reference to the P&L. The NII was below our poll, and thanks to lower provisioning, the PAT was ahead of our poll. Now, AM growth is one of the weakest that you are seeing in last 7 quarters with reference to 9.8% YOY. So, YOY growth is one of the weakest in last 7 quarters. Net interest margin is at 9-quarter low. It has come in at 6.7% versus 6.9% in the previous quarter. Operating profits are down both YOY and quarter-on-quarter. YOY by 14.5%, while sequential decline is more than 22%. Slippages remained elevated at 1,750 crore versus 1,620 crore in the previous quarter. Annualized slippage ratio, one of the highest in the industry at 5.3%. Asset quality, take a look at gross NPA. It has inched up by more than 4% quarter-on-quarter. So weak set of numbers coming in from Bandhan Bank. Back to you.
All right, Abhishek, thanks a lot for that. I'm looking at two metal stocks. One is JSPL, the other one is NMDC. For JSPL, I'm looking at their numbers that they came out with. And on the top line, there was a big beat. So that was good. But on the EBITDA number that was reported, actually, it was lower. However, there was an adjustment of around 230 crores. So adjusted for that, actually, the adjusted EBITDA looks better than what we are working with. And the adjustment was on account of some provision for old GST. There was also some inventory cleanup for several years. So just adjusting for that, the numbers look good. On the top line, you'll say, how come they give such a big beat? Well, the volumes are much better. Came in at around 2.1 billion tons, much better than where the street was at around 1.95 to around 2 million tons odd. They have cleared up some inventory and they increased production. So that explains why the volume number was better. Adjusted EBITDA per ton as well, both for the standalone business as well as for the consolidated business. Standalone, we have calculated, consolidated, they have reported. There is an improvement of close to 7 to around 800 rupees per ton on a sequential basis. And the street will like that. Moving to the debt, there was some reduction. So from around 13,500 crores, it's come down to around 11,900 crores or thereabouts, which is good because they've been doing aggressive capex out there. And the capex plan is virtually unchanged for the next couple of years, which is good because that's one of the key monitorables. They're saying that the sales volume number will move up from around sub 8 million tons to around 8.5 to around 9 million tons. Give and take everything, going with the positive reading out here. Valuations in JSPL's favor as well. Next up, we're going to NMDC. The street was waiting by for a price increase, and that's come up about. They've gone ahead and increased prices both on lumps as well as fines by around 440 rupees per ton. Good news, first price increase coming in all the way since January. And this is a little bit higher than the price increase that the street was working with of around 250 to around 300 rupees per ton. So it is anticipated, but the quantum is better. And the reason is that we have been seeing in the OMC auctions, the premium has moved up. So part of the street was expecting this, going with green on both these two stocks. But let's hop across to Sudarshan. He's tracking Sona BLW as well as JSW Infra. So take it away.
Morning, Nigel. So first talking about Sona BLW, it was expected to be a weak quarter because of that company was upgrading a software to its one of the largest customers, but the earnings have come slightly weaker than expectations. Also factoring PLI benefits, company has reported margin of 25.4% versus expectation of more than 26%. Also, company has a near-term outlook related to US trade issues remains a concern, and company is saying that its 3% of total revenue remains at risk. And regarding Scott Kubota's railway biz acquisition, it was expected that it would be completed by May 1. Now both the companies have extended the completion date to June 1. So I'm going with mild red for Sona BLW. Coming to JSW Infra, earnings were largely in line with estimates. EBITDA has increased more than 10%. Margin has come in at almost 50% versus Jeffrey's estimate of 48%. Also, company has reaffirmed its target to increase the capacity to 400 million tons from current capacity of 177 million tons. And for FY26, it's estimating revenue growth of more than 10%.
All right, so thank you very much for that. PNB Housing Finance is the next one. Abhishek has got more. Abhishek, morning.
Morning, Prashant. So, sources tell CNBC-TV18 that PNB Housing may see a block today in trade. So, a block has been launched. Seller is Quality Investment Holdings PCC, which is a Carlyle entity. The offer size is about 10.44% of the equity. So, it's a clean out trade from them. Offer size is about close to 2,604 crores. Floor price has been priced at 960 rupees per share, which is at a discount of 5% to NSE's closing price day before yesterday. The broker is IFL Capital over here. Back to you.
Okay, that could be a pretty large block. Abhishek, thanks for the heads up on it. Back to Sudarshan then. Sudarshan, auto sales for the month of April. Is there any light at the end of the tunnel?
There are certain companies which have reported good sales, and if you talk about the sectoral PV sales have improved, while two-wheeler has presented a mixed picture, and also on tractor front things are looking good. So now we'll start with the companies which have reported a good set of numbers. The first one in the list is M&M, for which both auto and tractor segment sales have improved or basically have come in much better than estimates. Also good part for M&M is now in the passenger vehicle segment, it's number 2 player. It has now surpassed both Hyundai and Tata Motors. Now coming to TVS Motor, it continues to outperform its peers. Even in the month of April, its sales have increased 15% and is much higher than what our expectations were. Now coming to, and even for Maruti, sales have come in much better, not much better, it's like slightly better than estimates. But this time what has done good for Maruti is the compact segment like Baleno, Wagoner. Those sales of these cars have improved, but for Alto and Espresso, sales remain under pressure. Even in the month of April, sales were down by 45%. Now coming to Hero MotoCorp. It has seen a sharp drop in the sales for the month of April, and because of the production halt that company had announced from April 17 to 19 in its 4 facilities. But all the estimates had considered that. If you compare by the estimates, the sales are still very much down. It's down more than 30%. Last one is Tata Motors. It has seen an all-round decline. All the segments except 2 segments have seen a sales decline. Domestic CV sales have fallen 10%. PV was down 6%. And worst part is even EV sales have fallen 16%.
Oops, that's definitely an oops for Tata Motors and even Hero Moto, despite that planned maintenance shutdown, but it seems the sales have fallen even more than what was penciled in. Thank you for that, Sudarshan. Let's quickly then also round up the commodity market action. Actually, before we get to commodities, let's recap our list of stocks to watch. The ones that have positive news flow, let's get them on the screen. We have JSPL, NMDC, JSW Infra and PNB Housing Finance. The ones that have negative news flow are Eternal, which of course is for former Zomato, Indus Towers, Federal Bank, Bandhan Bank, Sona BLW Precision, and auto stocks are likely to see a mixed set of moves amidst April auto sales numbers. Okay, on that note, now let's go across to Manisha to get a roundup of the commodity market action. Manisha, good morning. So what's the latest?
Well, I'll start with the crude oil prices, Surbi, because we've seen 2% of gains come in the overnight market. But even with that, we are still trading below $60 a barrel for the U.S. crude prices. Well, U.S. has imposed new sanctions on Iran, saying that any country that buys oil from Iran will not be allowed business with U.S. That is what is adding premium to the markets back yet again. But having said that, there are statements from Saudi Arabia saying that they're unwilling to prop up prices with supply cuts. So you are looking at one, record production from U.S., second, OPEC and allies, including Saudi Arabia, is increasing production. And the third is that the markets are looking at weak U.S. and Chinese data, and that perhaps could continue to weigh onto the markets. So it's contradicting as fundamentals, but nobody's expecting the crude oil prices to run away up from here. We are still trading at around $60, $62 a barrel for both crude varieties. I'll quickly talk about gold as well, because we saw 2% of a decline in the overnight markets here. So from an all-time high of $3,500 an ounce, we are trading at around $3,200 right now. So $300 of a cut is what we've seen happen in the last couple of weeks itself. So with that, while we've seen 6% of gains come in for the month of April for gold, but it has been a sharp decline for the Indian markets as well, where from a lakh rupees, we are trading at around 92,000 right now. So good amount of profit taking is what we are working with in sense of gold.
Okay, all right, Manisha, got it. Thank you very much for that. With that, we do have to take a very quick break, come back on the other side, and then we'll have lots more for you, including, of course, a conversation on the fundamentals. So Siddharth Khemka will join in with a couple of stock ideas.